Welcome to the Groceries Podcast, where we explore how innovation, AI, and human intelligence are transforming the way businesses grow. I'm your host, Josh Jackson, founder of Red Letter AI. For 18 years, I've lived by the high-tech, high-touch methodology, and that's exactly what we do. We help companies combine cutting-edge systems with automatic, authentic human connection. Our focus is simple. We build AI-powered lead generation, automation, and sales systems to find the hottest leads fast and help real humans connect with them instantly. We also specialize in workflow optimizations, technical implementation, and building automated client management portals, perfect for businesses that have unique, high-value offer and already handle massive scale and refer volume with simplicity. Each week, I sit down with entrepreneurs, consultants, and leaders who are using technology and authentic connection to drive real growth. So if you're passionate about scaling smarter, selling better, and staying human in the digital world, you're in the right place. Well, my guest today is a true outlier in the financial world. He is the founder of Paragon Capital, a firm that has cracked the code on organic growth and industry that's typically only grows through expensive acquisitions. While most of the 17,000 registered investment advisors are all doing the same thing, offering passive strategies and basic financial plans, Craig has focused on specialized, high-yield niche structured products, which he now calls defined outcome funds. Craig's firm is growing 20% year over year, purely organically, and is on track to manage over $1 billion. He's not just managing money, he's implementing unique tax-efficient strategies for high net worth clients that are truly life-changing. He's here to share how he built this unique business and how he's using simplicity and a digital format to dominate a complex market. Craig, welcome to the podcast.
Hey, thanks, Josh. Thanks for having me.
Awesome. So before we dive into Paragon, can you share with us a little bit about your background, your journey in finance, and how you got to where you are today?
Yeah, I think a lot of careers, it's always being in the right place at the right time. So I was a sophomore in college studying business, and my grandfather introduced me to his wealth manager who was working in a bank trust company in Kansas City. He invited me down to talk, and wasn't hiring at the time, but we went ahead and just had a really nice conversation about the industry, and he ended up creating an internship for me for that summer. I worked in wealth management on that internship and then over a couple holiday breaks, and ended up going to work there when I graduated as a trader in the trust and wealth management department, trading bonds, stocks, commercial paper, treasuries, a little bit of everything, and really getting to learn the industry from the backside. The timing part was great because it was the mid-90s and we were trading in eighths, and I was on the trading desk during decimalization when we had to convert all of our systems to trading in decimals like we do today. The bid-ask spread on stocks was $4. Today it's like a penny. So the whole industry really changed as technology came into the trading world in that time period, squeezing the profits from the Wall Street brokers and really changing the way everything happened. And then throughout my career, we've seen those trading commissions go from absolutely expensive in the thousands of dollars per trade to what we see today, which is no trading costs on most stocks at most platforms, and the costs coming way down, and technology allowing almost anybody who wants to invest the ability to be able to open an account and trade stocks and investments however they want. After being on the trading desk for about 18 months, I got an opportunity to go work with the person who hired me, Howard Jacobson, as his assistant, and went on all of his client meetings with him. About 6 months into that, he left the bank and started Paragon Capital Management. He was the actual founder of the firm back in 1998. And I stayed at the bank for another about 7.5, 8 years and took over the rest of his client book. I got a chance to manage an $80 to $100 million pension plan. I got a chance to start a technology mutual fund when I was 27, which again, timing is everything. The SEC gave us the green light to start trading that tech fund in May 1st of 2000, which the tech bubble burst March 1st of 2000 during the biggest epic decline in stock market history of the NASDAQ, losing over 80% of its NAV. We were trying to run a tech fund. Started a growth fund in 2005, and then I left and bought Paragon in 2000. And we had a multi-year transition as I was able to buy parts of the company until becoming the majority owner somewhere around 2009. And so it's been a great run. And we've seen a lot of changes in the industry and a lot of changes in wealth management during that time period.
Awesome. So tell me a little bit more exactly about Paragon and what you guys do. Like, who are your ideal clients, who you serve, and these unique strategies that I kind of touched on.
Yeah, and that's evolved over time. When I first joined in 2006, a majority of our clients were in Kansas City, and the rest of them had ties to Kansas City. And we were doing all individual stocks and individual bonds. So we were creating a 25 stock portfolio, and we were buying individual bonds, either taxable or tax-free, and doing a bond ladder. And then over time, after we saw the 2008, 2009 financial crisis, when the market dropped over 50% again, we were looking for ways that we could better manage money for people versus a 100% increase in the 90s, a 50% drop in the S&P in 2000 to 2003, 101% recovery from 03 to 08, a 53% drop in 08-09, a 100% increase through 2014. And so people were getting, as they were getting older, not as tolerant of these huge swings in the market. And so we did an extensive search, my team and I, and we came up with the idea of something called structured products. And we introduced those in 2000. So as of today, we're managing about 35% of our clients' money in individual stocks. We have a little bit in individual bonds and a majority of the money in structured products, and then a little bit in private credit and private equity. So we offer all the different asset classes, basically anything a high net worth or ultra high net worth client would want. But we've really found a niche and a specialty in the structured products industry.
So you mentioned the industry has low growth rate. We had a chance to talk before. And so could you give us a little bit more of a macro view of the financial services industry and what's the biggest problem right now in it?
Yeah, so the financial service industry, like a lot of industries, is really spread out a lot of entrepreneurs that started their businesses back in the 90s, 2000s, and a lot of those founders are now in their 70s and 80s and looking for succession plans. And the stock market has gone up so much, a lot of their business have become unaffordable for their employees to take over, and they're looking for an exit strategy. Private equity has really come into the industry recently, realizing this is a very cash flow heavy industry, and they can consolidate a lot of firms together to create big, huge firms that have economies of scale by aggregating the back offices and the operations and the service models and simplifying a lot of the processes to make it more profitable. And so we've seen the organic growth rate, which is the number of new clients coming in through referrals and just going out and meeting people, is probably around 2 to 3%. But a lot of firms are really growing faster than that through acquisition. And so at first, firms were using their own money to go out and buy competitors. And then the private equity came in, and almost every major private equity company has a stake in some investment firm. And so it used to be, when I started back in 2006, if you managed $1 billion, you were considered to be big. Today, we have firms that are $50 billion, $100 billion, $200, $300, $400 billion firms that are now rivals of big Wall Street wirehouses like the Merrill Lynch's, Bank of America's, and stuff like that, and their wealth management divisions. And so we've really seen that consolidation. But with that comes becoming almost like a commodity and commoditization, in that if you're going to have 10,000, 20,000, 30,000 clients and hundreds of thousands of accounts, you can't customize every client's portfolios. And so they've really simplified things to using ETF models. Some do mutual funds, but really kind of doing a passive investment structure where they can have models built out and put clients in a predetermined investment product and manage at scale.
Yeah. So you mentioned 2.5% organic growth in the industry, but yet Paragon has managed to grow 20% organically. What is the micro strategy and your unique value proposition that's allowed you to grow exponentially?
Yeah, no, that's a great question. So when I joined the firm in '06, the big topic of discussion was what's your unique value proposition? We custody with Charles Schwab. They'd come out to our office and do these exercises. We'd see them at conferences and everything else like that. And they'd sit around a table and you'd go around with everybody, all the employees, and it's like, what's your unique value? And everybody would say, we give great customer service. Well, if every single firm says they give great customer service, it's not unique. And so there really isn't a lot. That's where I said it's become a commodity. If everybody's using one of two or three or four financial planning software systems, and if everybody has great customer service, and if everybody's using a passive ETF strategy, you're not doing anything unique. And so what we were able to do the last several years with doing the structured products is to generate income at a rate much higher than what you can get in the public bond market, to be able to provide downside protection on equity portfolios and still provide upside participation that's greater than the market, and to be able to create custom investments that clients have been looking for, but had prior only been able to get if you were a private banking client at one of the major wirehouses in New York. And that has grown, and our reputation has grown to where we're getting referrals and we're getting clients in 40 states, and we have clients in Canada, United States, Costa Rica, and we're getting referrals from all over the country as they are looking for something different, something unique, something that can help them reach their goals. And the structured products is a very broad term, but when you can create your own investments, you can control those terms, and you can take out a lot of the really negative things that you read about online, like front loads and a lot of the big fees and capping your returns on the back end. We can eliminate all that because we're a fiduciary and not a broker, and we're not making our money on product fees. We're making it as a manager and managing the entire portfolio. So we really found a niche that not many people are utilizing, to the point where we are now getting calls from other money managers, and we are becoming a separate account manager for firms that are managing billions of dollars that want us to manage a sleeve of their clients' portfolios in our structured note strategies.
Wow. It sounds awesome, right? So let's do this for me. Let's boil this down to something very simple. And talk to me like I'm a fifth grader, because people need to trust what they don't understand. So can you share a story about a client? Obviously don't name names or anything, but maybe a really smart one who was skeptical, where you took a super complicated idea and you kind of drew it out on a napkin. Like, what simple thing did you say or show them to make them go, aha, I get it, and they decided to work with you?
Yeah, so one of the things I've always believed is that you never want to, that when you're dealing with a high net worth clientele, they're never going to admit when they don't understand something. And so what you want to do is simplify it to the point where they're going to not have to ask you to clarify it. So you don't want to try to act like you're Ivy League, smarter than everybody in the room, using big terminology, using fancy charts and fancy PowerPoints and presentations. I don't have a presentation when I meet with a prospect. I prefer, if I'm in a conference room, to use a whiteboard or to use a pad of paper and a pencil. I'm old enough that if I could use a big chief pad and a big fat purple crayon, I'd do it that way. Let's just take this down to the simplistic terms of a kindergartner and make sure you understand it every step of the way. And if you can understand and make the client understand how the investment works, why the banks that are issuing the investments issue them, how the bank makes their money, how the bank generates the income that you're making, and how we make our money, then they're more likely to engage with us than if you say, hey, I can get you 10, 11, 12% on bonds. They're going to be like, that's too good to be true. And they're not going to engage. But if I can explain to you how the bank does it in a way that you understand, then you're like, oh, wow, I wish I'd heard of this before. And so we have a fairly high closing rate, much higher than the industry average, because we spend the time to make sure we are listening to the client, listening to what their goals are. So a great example would be, we had a client that came in from the East Coast, and they were working with their advisor, and they were 80 years old. This was about 4 years ago, and they needed $77,000 to live on. And they had about $2 million in their portfolio, and they were invested in stocks and bonds. And that advisor put them through the financial planning software, figuring a traditional 60-40 model, and said by the time they were 94 years old, they would be out of money. So enough money to live about another 14. We looked at it and we said, if we took half of your money, the money you have in bonds, and we put it in our income strategy, we could make you between 10 and 12% a year, which is what we've done the last 4 years. And then we left the other $1 million in our individual stocks, which we manage as well, and we're working around her existing holdings so that we're not creating a ton of capital gains. And here we are 4 years later, that $2 million has grown to $3 million, and we're generating somewhere between $120,000 to $130,000 a year of income, much more than what she ever needed to live on. And now when she's 94, she'll probably have $4 or $5 million, if not more, instead of zero. And so it really becomes life-changing when you can increase the income. Because, I was reading about this the other day, and when you really make it simple, money market funds are down to 4%. Most bonds, if you're doing a high-quality investment-grade bonds, are maybe paying 5%. Inflation is 3%. That means your real return is between 1% to 2%. And that makes it very difficult to live in retirement if your money's only growing at 1% to 2% in real terms after inflation. And so what we're able to do by increasing that income into the double digits, then after inflation, you have more like a 7% to 8% return, which is life-changing for a lot of these people that are trying to replace the income they made when they were working.
Wow, that is an incredible story. That lady is very grateful for you and that you came into her life for sure.
Probably not as happy as her kids are.
The whole generation of family is very excited and very fortunate that they found you. So I would love to know, like, for you and Paragon Capital, like, what is your primary focus? What are you most excited about right now?
And what I'm really excited about is, wealth management is almost like a boat with a hole in it. In that every year you have required minimum distributions that go out. Every year people take income out to live on. And unfortunately, we've been around for 27 years, you do have clients that pass away. And so you're constantly having to replace and replace those assets so that you can keep the firm going and hopefully growing. And so one of the issues that you have as you grow bigger is trying to maintain that level of service that we have with our existing clients. And so we know our clients very, very well. We've worked with a lot of them for many, many years, some of them for 27 years or longer, going back to our previous firms. And so they're almost like family to us. And we meet with them 4 or 5 times a year, and we talk to them on the phone quite a bit. And so if we were to double the size of the firm, we would double the size of our clientele, and we wouldn't be able to give that same level of service that we've been giving. And that's what I think you see with some of these mega firms that have 10, 20,000 clients. The owners of the firm aren't going to know all the clients. And then when somebody leaves, they take the clients with them, and it just becomes a whole mess. So what I'm really excited about is we are growing our organic client base at a reasonable pace that we can still maintain that great relationship we have. But the separate account management part of the business is really where we're going to have a lot of accelerated growth, where we're managing money for other advisors, and we're now adding value to their clients, but we won't be expected to meet with those clients face-to-face. We'll be meeting with those firms. So when we can grow the firm and get to that $1 billion mark, hopefully in the next year or two, and grow beyond that, that allows us the resources to continue to add more staff and more resources and more things that will help our clients out and their clients. And then scale is another big thing. If I'm creating a structured note and I've got $5 million to invest, I'm going to get a pretty good pricing. If I'm investing $20 million, I'm going to get better pricing. If I'm doing $50 million, I'm going to get even better pricing. So by aggregating money from other money managers along with our clientele, we're able to get more scale and have more negotiating power when we go to these banks to create these investments and be able to negotiate better terms for everybody. So it's really a win-win for all sides of the equation.
Awesome. So for looking forward over the next 12 months, what are the biggest goals for Paragon? Is it growing capital, or is it growing advisors that you want to add to your portfolio to help with their clients? What is the next 12 months? What does success look like?
Yeah, we really spent a lot of 2025. We added 3 new associates to our team in 2025 and 1 in 2024. So we went from about 7 people to about 11 people. So we're very lean, but we've really added a lot of depth to a lot of parts of our business, especially on the financial planning side and in the operations side, to be able to support the growth. And now we're really ready for that growth. So we've partnered with some really, really large RIAs to be their separate account manager for the structured note products. And we're in talks with multiple other firms as well. And so our goal for 2026 is really to grow that institutional side of the firm, which is the separate account management side, while maintaining the incredible customer service that we've had with our existing clientele.
So here wrapping up, I have a couple questions I want to ask you. I call them pay it forward questions. So the first one is going to be very business related, because I love that you've grown 20% organic. Like, that is incredible in an industry where everyone else is buys their growth. For our listeners who are struggling to find clients, what is the single biggest mistake they're making in their marketing, and what is the non-obvious thing they should focus on immediately to make their business truly magnetic?
Yeah, well, I'm involved in an entrepreneurial organization called HempKC, which is the Hellsberg Entrepreneurial Mentoring Program, which was founded 30 years ago by Barnett Hellsberg of Hellsberg Diamonds. And, one of the things we always talk about is, as an entrepreneur, you've got to take time to work on your business and not in your business. So you really, no matter how busy you are, you've got to find time to step out and work on it. So even though sometimes I'm working, 50, 60, 70 hours a week in the business, I've got to find time to work on it as well. So I've been very involved in organizations in Kansas City. I've been involved on multiple boards for things like Make-A-Wish Foundation, the Children's Hospital. I've been involved in Rotary for, I think, 16, 17 years. I think it was just 17 years. I've been past president of that twice. I just founded an international networking organization in Kansas City called Rotary Means Business that has 260 chapters worldwide. And we just launched Kansas City about 2 or 3 months ago. And so we're super excited for growing that. And it's a great way to it's all networking of business owners and business people in Kansas City. And so it's really get out there in your community, get to know people. The more you network without wanting something, I always try to explain to people, and I do a lot of keynote speaking, that there's a huge difference between selling and networking. Selling is one way. It's telling somebody what you do and asking if they want to buy it. Hey, I'm a financial, I'm doing these structured notes. Can I manage your money? That never works well. And it's very hard to sell high net worth clients. Networking is a two-way street where you go out to these events and you ask people what they do for a living. You ask them what their profession is, how they spend their time, what they need help with, who you can introduce them to, how you can be a resource for them. And when you start asking how you can be a resource for someone else, they inherently want to help you back. And then they'll ask you about your business. And when they ask you about your business, now they're listening. But if you're selling them from the get-go, they're tuning out. They're so used to being sold, they don't want to hear it. And so you really need to get to the point where people are asking you what you do, and then say, you know what, I know somebody you should meet. And then it's about going and meeting with that person. And maybe they would work out, maybe they won't, but they might introduce you to 1 or 2 people. And the more you can get your name within the community and people knowing what you do, the business will eventually come down the road. So it's like planting seeds and then waiting for them to germinate and grow. And I've been doing this for over 30 years. And that's kind of where I'm at in my stage of my career now. I've spent years and years and years planting those seeds and meeting people that are now business leaders and business owners and people within the community. And as they sell their businesses or as they become more successful, now they're circling back around and said, hey, you really helped me out years ago. I want to work with you because I know you're an ethical person. I know that you are about helping other people. And, Rotary's got the motto, service above self. And you've got these, it's just this whole concept of you'll get more back than you put in when you really get involved in your community and really do it for the right reasons.
I love it. I call it the law of reciprocity, and you nailed it. It's hard to do, it's hard to think about, but once you start doing it, you see how it works. Nothing better. There's nothing better.
Absolutely.
And then, so what is the single best business advice you have ever received?
I think what I just said, and that is you've got to take some time to work on your business and not in your business. And, the brightest minds in business all do one thing in common, and that's all take time to think. And so you need to have a quiet place where you turn your phone off, you turn the TVs off, you shut out the outside noise, and you just sit there, and it's the power of boredom. And you just sit there and let your mind go free. And that's where you have your best ideas. For some people, maybe it's in the shower. Other people, maybe it's while they're driving. Maybe it's, when you're laying in bed and you first wake up and you had a dream about something. But you need a place where you can just let your mind go free and just let the ideas flow. And then write down as much as you can. But don't go into it with a pad of paper and a pencil thinking I'm going to write down. Just let your mind go free and really just have that quiet place to think and be creative. And even if you're not a creative person, I am the least creative person. You got to have that spot where your brain knows now's the time I can kind of power off and relax. And that's when you're really going to have your best ideas. And then, reading is important. I'm a big advocate of reading, but I think some people read too much. And they read so many books on business that it's the flavor of the month. So they read a book, they think it's great, they're going to implement it in their company. The next month they read another book, now they're going to implement that. And then they're going to implement that. And they're constantly changing the culture and what they're trying to do. You really need to figure out what it is that works for you and your business and then stick with it for a while and not keep trying to change it, because you got to give it time to adapt and you got to give people time to buy in. And if you're constantly preaching the latest thing you read, it gets very hard for people to understand what they're trying to accomplish.
I mean, you just dropped so many gold nuggets. It's unbelievable. We could have a whole podcast just on what you said there, and it's amazing. You're 100% correct. As you're talking about like where you have your best ideas, I'm thinking, oh, where do I have my best ideas? And you named 3 of them. And it's always where you're away from technology. The other one I'll throw in there too is if you ever go have a massage, you're just there and you kind of this states of relaxation. Like all these ideas start flowing, and you're just natural. In your natural state, I guess, right? Being in a massage. So, and then the other one was, man, I used to do this. So you're speaking my language. I used to read a book. I used some podcasts. And I want to go implement all those ideas. And about 8 years ago, somebody was like, no, like, what's the one thing? You read this book, you listen to this, you go to this conference. What's the one thing? What's the one gold nugget that you can pull out and you can go and implement right away? And so it's always changed my mindset on, listen to books or podcasts. Like, what's the one thing? So you nailed both of them. We could have a whole podcast just on those 2 things right there. Yeah. So, yeah, and then my last question is, if you had a chance to talk to your 15-year-old self, what is the one thing you would tell him?
Wow. I wish you would have given that one to me in advance so I could think about it. I've learned throughout my life, and I try to live my life like this as much as possible, and that is only worry about what you can control and don't spend any time worrying about what you can't. And and people ask me how I have so much time to get, be on so many boards and so many things and do this. I don't spend any time wasted worrying about what I can't control. I don't worry about what the weather's going to do tomorrow or next week. I don't worry about if my flight's going to be on time. I don't worry about anything that is out of my control. Life is very short. Life is very precious. Focus on what you have control over, and you'll deal with the rest when it comes up. But what we find is that we spend so much time worrying about things that never happen. And, one of the most powerful keynote speakers I ever heard, and I'm not a big keynote speaker fan, but one of the most powerful keynote speakers I ever heard was a Navy SEAL. And he talked about that an extremely high percentage of Navy SEALs, or people that are trying to become Navy SEALs, ring the bell to quit, not during an exercise, but during downtime. So, maybe they'll be in the water for hours and hours and hours, just getting pounded by waves, and it's really hard, it's really tough, it's exhausting. They'll come out, they'll announce, go get your shoes and socks, we're going on a 20-mile hike, and 2 or 3 people will ring the bell. They won't do it on the hike, they'll do it thinking about the hike. And then after 2 or 3 people ring the bell, they'll be like, yeah, we're not doing that, go get some food and go to bed. So they were worried about something that was out of their control, and they quit just thinking about it, as opposed to how they just waited till it happened, and then if they couldn't do it, they could have quit, but they never even tried. It was so much in their head. So it's about mental toughness. It's about really focusing and spending your time focused on those things within your grasp and those things that you can control, and just forget about everything else.
That is a fantastic. I've never heard that story before, and I know some Navy SEALs, and I've never heard that. So that is a great piece of advice, and it just makes me think of the word fear, right? False evidence appearing real. It's something that hasn't happened, and we're so caught up in what might happen rather than just.
It's the butterflies before you speak. It's the you hear about people that get butterflies and throw up before every professional NBA game or NFL game, or it's that nervousness that a lot of people say is very healthy, and that if you don't have the nerves, then you probably aren't passionate anymore and you should retire. But every level, no matter how successful you are, famous actors, famous athletes, they all get that that anxiety before you do something, that fear of failure, that fear of things not going well. And then you get out there, and football players talk about the first, as soon as they get that first hit, then it all slows down. Or basketball players, once they make that first jump shot, everything looks bigger. And you hear basketball players talk about getting everybody involved early. Pass the ball around, make sure everybody's engaged early on. It's the same type of thing. It's worrying about what might happen, and then you get out there and you realize, oh, I've been playing this game my whole life. It's just a game. Yes, there's 25,000 people watching, but it's it's basketball.
Preaching to the choir. I get nervous for every time before I get on camera, so I totally understand what you're saying. So lastly, please tell people where they can find you or find more about Paragon.
No, absolutely, and I appreciate you asking me that. Our website is paragoncap.com, Paragon, C as in cat, A as in apple, P as in Paul. And then we have a YouTube channel at youtube.com/@ParagonCap. We have 20-something videos about, we have a bunch of them about structured notes. We have a bunch of them about some other investment ideas, and just a lot of some history of the markets and history of Paragon. So we'd love for you to check those out, and or you can always give us a call at our main line at 9.
That's awesome. We will have all those contact details down below. Just hit more and go down and search in the description below. But Craig, I appreciate you taking the time to chat with us today. It's been very educational, and I love it. And again, so many things we could talk about.
Yeah, well, I appreciate you having me on, and excited to watch your future growth of this podcast.